Hello there, everyone, and welcome to our special presentation this week titled Top Trading Systems Heading into 2024. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, so I'm delighted to bring you this content to be sure. And coming off the back of the Tampa 2-Day just last weekend, hopefully at least many of you had a chance to view some of that wonderful content, and really appreciate all the people we had down there live. It was a great bang-up environment and really enjoyed our time down there. But that whole event was about setting you guys up for success in 2024 and beyond. And here again, this is going to be another way to start making some decisions on how you want to try to best take advantage of this coming year and, again, years beyond this coming year. So this is all about choosing some of our mechanical trading systems and some considerations that you want to go through and helping determine what might be one of the better options for you as an individual. So I'm happy to report that on our top trading systems in our viewer, as you'll see in a bit, there are choices there for everyone. So let's get right into it and take a peek. All right, so here we are at the homepage for VectorVest. So to get to the trading system viewer, hopefully you've already guessed, you're going to go right up to the viewers tab. And when you get there, over here on the left, if you don't land on VectorVest viewers home, in which case there will be a trading systems box here. You just click on the button, go to Trading System Viewer. You'll also, if I pull this out, have a panel over here on the left, and you can choose Trading System Viewer from there. So just whatever's easier for your setup at home. Now, when we get here, what I want to do first is introduce the viewer again, make sure everybody's comfortable with the information as we work our way across, then come back and take a look at some decision points that you should be aware of in helping you make better choices. So first things first, we're going to name everything. You're going to see some funny names in here, particularly if you're new to VectorVest. There's nothing funny about the strategies. They're, it just had a clever leader in Dr. Bart DeLito, of course. And of course, byproduct of that, a lot of our subscribers who have submitted strategies over the years have also used some clever naming conventions. So don't get too hung up on the names. We're going to come back, show you what kinds of stocks are in some of these, and that'll be a part of making better choices. But the nice thing is, as you get to the next category here, here's where it starts to kind of hit you, smack you right in the face, if you will. First thing you got to know for yourself is, are you more on the aggressive side of things? Are you more prudent? Are you going to break your capital up and have most of your capital in the prudent to conservative category and some of your capital in the aggressive type category, which is something a lot of people don't think about, is breaking your capital up into a couple of different tranches and emphasizing one or the other depends on your specific situation. But right out of the gate, it'll tell you what you're dealing with. And aggressive means aggressive. You're going to have potentially much greater gains, but also the ride along the way can be a little more treacherous in terms of they have higher drawdowns, periods of time where, a much decent more amount of capital can slip away before you get to a higher watermark than a prudent. Prudent's going to try to give you the best balance there of risk to reward, right? And then conservative really emphasizes trying to remove as much risk as possible in your outcomes. And it's not to say that any of these categories can't have more severe to lengthy drawdowns at times, but the byproduct of the category is really the kind of stock that the trading systems are picking for you. So conservative means some of the highest relative safety stocks in the database. Prudent means best of both worlds. You're getting high RV, high RS in most situations. And aggressive, really emphasizing the relative value in most situations, right? Some of that can also come down to what we've seen as performance and some of the gain in relation to drawdown as well. But by and large, it's a function of the kinds of stocks that are being picked on most occasions. And when we come to the mode, that's going to tell you long, short, combo. Come to the market timing situation, you can see we're utilizing each and every single one of our different market timing models. And that can have some play into how aggressive or how conservative a system is. But again, really it's largely driven by the stock. And that's a thing a lot of people get confused is, I need an aggressive market timing model with with aggressive stocks. That's not true, actually. The stocks, the kinds of stocks you're picking largely dictate that action. Whether you're picking them on a confirmed up call or a primary wave up, for example, an aggressive stock is still an aggressive stock. You see what I mean? So don't get tied into that too much, but it does tell you what you're dealing with. Then you have your 1 month, 3 month, 1 year performances. We generally advocate for picking trading systems that are higher in all 3 categories there. When we look at the Spark chart, this is wonderful because it gives you a nice gauge. And by the way, I'm sorted by drawdown, I think, right now. So if you're trying to follow along in your own viewer, you'll figure out how this one got to the top here pretty quickly. But if you look at this Spark chart here, that gives you a nice feel for the year's worth of action graphically. And what this one does really well is minimize risk and still give you substantial reward. And that's why it's prudent. Okay. If we go to the all-time, 355% is nothing to shake a stick at, and you're doing 29% a year to get there. So many, many years of successful performance. So you've got a nice track record here. Is something, maybe you're not thinking about when you're looking at this tool, but it's a wonderful return year on year, and it's done so. It's got an established track record of doing that. And maybe this is the best situation of all. And the reason I often like to start by sorting in this category here, drawdown, it's the ride along the way. How bumpy is that ride? Because drawdown is peak to trough before a new peak is achieved. So how much does it come back down before it goes higher again? And of course, we're limiting it to 1 year here. Drawdowns, if you have a really cruddy system, could actually happen over multi-years, if your portfolio does nothing but go lower over a 2-year period. But that's certainly not the case here. We can see the annualized rates of return and the drawdown along the way. All right, so it's a wonderful combination here, actually. I mean, money managers kill for like 2 to 1, just to be honest, and might favor something more along the lines of compounded rate of return. But, annualized rate of return is also telling you the story here, and that's a beautiful combination. Next one's pretty good as well. 3 to 1 here, a little over, right? Nearly, well, yeah, let's leave it at 3. And, down the list here, you've got some good choices. On the far right, you're going to have an add-on category. And in the add-on, it'll tell you if you need a particular product that's an additional purchase, for example, or a course, something along those lines. In this top one, everyone would need Profit Locker to follow this one, which would mean either an intraday enhanced VectorVest subscription or above. So 15-minute delay up into real time, because Profit Locker is a product that sort of relies on that data. It doesn't make any sense to put out really to end-of-day subscribers. Okay. Now, when we come down to the next one, anybody, there's no limitations here. Okay. So Profit Locker is not being used as a stop loss. And so if we sort by some of the top trading systems for this past year, we'll go back to the view I just had here in a sec. You can see 4 out of the top 5 require literally nothing but an end-of-day subscription, which I think is wonderful. And so there's some good choices up here for everyone, and we will be looking at them. Okay. So what I'm going to do is go back to where I was, because I think this is certainly kind of the highlight trading system, I think, heading into 2024. And it's got a very entrenched, established track record. So let's learn a little bit more about this one. And the way to do that is you click on your trading system details button right up here at the top. And when we do, it'll give you a little bit more information. It'll also give you the long-term chart, and that's a beautiful one indeed. Okay. And so a lot of the drawdown in this one over the longer term came back, of course, in the unfortunate year of 2022, which was a pretty tough year, pretty tough sled no matter what you tried to decide to do then. Did rebound towards the middle of the year and on in through 2023, and really all the way up to where we are now. If we go down a bit further, you can see your 1 month, 3 month, 6 month, year to date, 1 year, 3 year. You also get your all-time. Okay, and so good numbers here all the way across the board. If we come to the bottom, you can see the kinds of stocks that are being picked. You can even sort by a particular category, like return on investment. And so Transdigm is the biggest winner in here, but Cintas, Fair Isaac, AutoZone, Booking Holdings, Granger. I mean, these are well-established companies. And so I would feel good if I were somebody looking for that about following, a system like this. And boy, it probably should be, since they're all S&P 500 stocks. And so to learn a little bit more about that, you can come up here to the top right and click on Trading System Rules. And right here at the top, you've got situations. Okay. And what this says is we're going to be buying long. I don't see anywhere where we're going short. And so for a lot of folks, that might be something that strikes a chord right away. Like, we're not going short or buying contras or doing anything like that in downs. In fact, we're taking no action here on both accounts, both on a confirmed down call or a situation where we don't have a confirmed green light. And so what that means is our stop losses here, which is profit locker 50-15, rule the roost. They just continue to dictate the action. What we don't do is replace stocks that we sell unless we're in an up, if it says we can. So more info is down here at the bottom. It says try to maintain 10. So if you're going to try to maintain 10 positions, you're going to be replenishing in up modes on confirmed green lights. Okay. And so you can see your timing model up here at the top. If I didn't mention that, also the strategy name, we're doing S&P 500 stocks, our own method of ranking those out with the S&P 500 winner search from Unisearch. Okay. So if you wanted to see something like that quickly, what does that mean? If we come over here into just the platform again, go to Unisearch, you can sort this list out alphabetically and go to RTC S&P 500 winners, just like what was listed on that page. And in here, you could even run it current and just kind of see the kinds of stocks that you would be dealing with on more of a go forward basis should we get, a light here soon. So you've got Bookings, Chipotle, Mettler, Toledo, great stocks. A lot of stocks that we are already in, even with Fair Isaac, Transdigm, and so forth. So, great caliber stock here. And you could even take a look at things such as, your RVs and your RSs on the whole here. And you can see every stock has an RS above 1. Some of them a little lighter on the RV category, right? But as a whole, very, very strong list. All right, let's get back over into the reporting here. And so not only are you going to try to maintain 10, you're going to replace, as we mentioned, but only in the ups. And when entering this situation, you're not going to close anything out that was still there, that somehow made it through the confirmed down in the neutrals all the way back into the greens. Right. And so you can see all the rest of the rules that are listed. I don't want to get mired down into all of the details. This is an interesting one that you don't find in many trading systems. It's maximum 3 per industry. So it does try to at least achieve some moderate diversification here amongst the 10 positions. So you won't be all in tech or, certainly all in the same types of tech, that kind of thing. All kinds of things that you can peruse through and look at in helping you make better decisions. Right now, that certainly I would have high on the list of top trading systems coming into the new year. It's positive in all 3 metrics. Spark chart is beautiful. I'd like to see some higher gains on the 1 month. And look, even if this was marginally down, beautiful system. And as we come across here, this is a wonderful combination. So the greater the disparity here, often the better, right? Now, I could look at that one. I could look at certainly top newbies, but let's look at all of the factors when coming up with some of the top ones. So I'm gonna commit to the S&P 500 winners by the best annualized rate of return compared to max drawdown situation. And then let's go back to the top of the list here, the 1-year performers, and have a look across. So right at the very top, we've got bottoms up 50-10. Now, the first thing you learn is it's aggressive. So that's a decision point. And I think when we get into the stocks that are in here, you'll get a better feel for that. But it is really pushing strongly. There are some things that you can't see under the hood here yet. So let's get in there and take a peek. But tremendous annualized rate of return. Look at the drawdowns. They're starting to get up there a little bit higher, right? So this is probably one of the more risky trading systems. It's also been the most lucrative as of late. It's even had the benefit of some buyouts and things like that along the way. That was the big jump here in the equity curve, but continuing to push even over this last October low. So if we click on trading system details, I think we're going to find different stocks than like Fair Isaac and Chipotle and so forth in here. So first thing you notice, prices come way down, and for some of you, that might be a defining factor, right? Because with those lower prices comes those higher volatilities and so on. And you can see a little bit of a more uneven distribution of, say, gains and losses and things. So, more of your winners are going to really run when they win. And every once in a while, you'll have a fair number of losers actually in your portfolio from time to time as well. And so that's what all this information is telling you here. Okay. But for the next bottom fishing opportunity in VectorVest, starting to look like this is a pretty good candidate, isn't it? So that's a nice piece of information to have in your hip pocket. Now, here's where it gets pretty fun. So no stranger to anyone, I'm sure, at this point are the Magnificent Seven. We all realize it's probably a little bit more than 7 stocks that are really pushing the markets along here. But the bulk of it is, bulk of the action is the Magnificent Seven these days. There's just no denying it. And this is a more prudent decision because of that. I mean, you're dealing with stocks that have a bright future still. Anybody think that the Magnificent Seven are done? I think the Magnificent Seven ride again, and they're starting to ride again right now, potentially. That's what the numbers say. Now, they did go through a quiet period there. I know I own a good number of them. And, for about 6 months, for example, NVIDIA did virtually nothing and has really popped out here over the last several days. As just one example, there are some Magnificent Seven stocks that aren't performing quite as well. But as a whole, these are good choices, all 7 on a go-forward basis. And as we look, this is a nice, beautiful spark chart here again. I don't see very much drawdown, and look at the annualized rates of return now. And so this comes back to even that statement earlier about multiple portfolios, how to best manage, say, the Magnificent Seven versus just how to manage the very best S&P stocks that are out there that can be outside of the Magnificent Seven, for example, right? So look at the combination here, 69 to 11. I mean, that now you're, you're getting up into rare air when you start to see those kind of disparities. So this has been a tremendous system. When I click on it, it's real easy to follow because there's not a lot of rules here. There's also, on top of the name of the trading system, there's a brief description. It says this buys Mag 7 stocks on GLB RT Kicker up signals and sells all positions on the confirmed down. So you do go to cash here. This trading system does not use stop losses, but you're being managed by the market timing itself. And I've been around VectorVest a long time. And one of my early observations was a lot of times you want to try to stay out of the way on stock performance as much as possible, cast loose safety nets, particularly on great stocks where you really need the stop losses more so than anything else, are on stocks that run into a lot more potential jeopardy than, say, the Mag 7. Right? So that's what you see here. Literally no stop losses along the way. Some things that I like to see, some things that Dr. DeLito taught me many years ago. We really like systems that go up year after year after year after year. That's what you want. So every month along the way would be really nice. That one is unachievable. I've never seen a trading system who for 4 years will go up every month. Right? But if you can get higher year-on-year performance and a pretty steady climb along the way, you're really heading into good, rare air there. So this one's great, and one that I think falls back into, hey, look, maybe what I should do is have a couple of buckets here, and some of it ought to focus on this Mag 7 stocks because that is the future and likely continues to be. Okay. So this is a good choice. As we run out to the right, it does not require profit locker. Obviously, there's no stops, right? So very, very simple. I will illustrate this one quickly on the timing. So if we go to the market timing graph, and if I focus purely on green light buyer, RT kicker. So we're going to be buying when we get a confirmed green light in the price column of the color guard. And we're going to be holding those stocks until we get a confirmed down. So no confirmed down yet. Now, one I think could signal, potentially anyway, at least as early as next week on price performance, depending on how the next few days go. But the buy to sell ratio is still well above 1. So looks still largely intact here for the most part, which is great. But should at any time in the future price go down for 2 weeks and the buy to sell ratio fall below 1, you would go to a cash position, sit that out, and then buy when the coast is clear again. So that's the idea here. We're going to be long Mag 7 in up waves. We're going to be in cash positions in down waves, and that's how we get there. Okay. So I'm not going to do that for each and every one that we're going to talk about, but hopefully that's going to give you now a feel for what we're doing with timing if you didn't already know. All right, so let's then go over to the viewers again. So I think this is another one, guys. Right? The Mag 7 ought to be at least a consideration. Now, some of you are like, I'm going to own some of those stocks for. This is for folks that want to just purely go after capital appreciation, maybe aren't as savvy with options, don't want to go about the hassle of selling covered calls on them or buying puts, and protecting those portfolios and doing all those types of actions. But that's certainly something that you could do and even still follow this, right? And basically that's what you should be doing with VectorVest to begin with. So for people that aren't up to that kind of a speed yet, this is a great guide on letting you know when they're going to really be hitting their strides and making money, and then when to start sitting some of that out. And if you don't know the options and all that kind of stuff, just moving into a cash position is typically a better idea. All right, so with that, another one. This one is brandy new and released in Tampa. And this, again, is one I'm happy to report seems really good for just about anyone. And so I think this is the easiest you can possibly make a trading system. And so I'm happy to report that as well. And look at the gains and drawdowns that are achieved here. So many of you have been really clamoring for an ETF trading system. This trades ETFs, and it only trades one. There's only one you ever need to know about. Now, I would suggest at some point considering maybe adding an S&P index ETF to this, or mixing it up a little bit. Just think of this as a basis to get started. And again, with tech stocks largely the future, I think that the QQQ makes a ton of sense, right? But if we go up here to the top and we go to trading system details, that again meets all of certainly Dr. Delito and me, therefore a byproduct of that are our desires in higher that year, sort of level, but then higher, right? And so this certainly still fits that mold. And what you really love to see is that a lot of these times when you go to cash, you're going into a cash position higher than the prior one on most occasions. And that is beautiful. Dr. Delito used to refer to that as climbing the golden staircase. And that's the future profitability and independence from the stock market, right? So beautiful equity curve here. You go down through the metrics and, it just continues to speak to you. The biggest drawdown at any time over the past several years has been 15%, and that's livable. I've heard some folks begin to scoff at something like that, but look, I haven't seen a mechanical trading system anywhere where you don't intervene in some way with options or something where, over time, you're not going to have that kind of a drawdown on anything that you try to do. So I love the simplicity here, because as we go to the top, it says this trading system buys just the Qs, just that one ETF, using the same timing model I just went through on the Mag 7 stocks. So in this case, you don't have to buy all 7. You could just buy this. Now, just the representation for the NASDAQ 100, I believe this is, that didn't perform as well as just the 7 stocks themselves. So there's decisions to make here, right? It really comes down to, you as an individual and in what you're hoping to achieve, and what's the easiest way to get there. So it's certainly an opportunity for everyone. Okay, super excited about that. And for the ETF people out there, hey, look, you could layer in an S&P and so on and so forth. And at some point, the S&P might perform a little better than even the QQQ, so on and so forth. And that way you're covered. You could start to work leverage in there. Now, what's going to happen? Your returns are going to go up, but what else is going to go up? Your drawdowns. And so you got to decide what is going to be the most comfortable for you. Anybody, and I hope anybody, can live through an 8.6% drawdown over the last year. You start going triples, and this number can start pushing 20. For example, and that, $200,000 on $1 million account is a lot different than $86,000 on a $1 million account, right? So that's kind of the way to think about these things as you go, and even how you want to allocate into systems as you go from there as well. All right, so I feel like I've already conveyed a ton of information here, and I'm already pushing a pretty decent amount of time in length on this video. And so I'm going to begin to move towards a close here. But the S&P 500 strategy, this one here, S&P 500 winners, really, really solid choice. And one that's got one of the more proven track records over a longer period of time than many of the systems in here. Mag 7, certainly a consideration on a go-forward basis. And so maybe even picking a couple of these guys. But S&P winners, Mag 7, our new one for ETFs. I think these are all great choices. And this used to be a model portfolio in VectorVest. This one also has a tremendous track record. 541% lifetime, 54% a year, and reasonable drawdown this past year as well. So it's still a good choice on a go-forward basis here as well. It had a little rough patch in there. That should have been the 12.8 pull. But boy, did it start to hit its stride again. So this one's really coming back with some pretty good strength. And if I go to trading system details, this will tell you this used to be model portfolio number 5. And boy, look at the long-term track record of that one. Very, very solid indeed. And so you've actually seen a couple of model portfolios in here, portfolios that we've been tracking for you guys for years and years and years. That we moved into Trading System Viewer. This was portfolio number 5, and the S&P 500 winners that I showed earlier, I believe was model portfolio number 2. Yeah, model portfolio number 2. But again, lean on the descriptions, look at the track record, look at the stocks that are in there. That's going to help you make the best decisions for you. Okay. All right. Now, what we can do then is I could take this guy and convert it. So up here at the top, I could paper trade it, and I could even actually trade it if I preferred to after I've developed enough comfort to do so. Maybe you have already. Maybe you need some more time. You can paper trade it, or if you have RoboTrader, which is a paid add-on product, you can even just get the notifications, even on your mobile device, on trades that need to take place on a real-time basis. But let's avoid that one for now. Let's stick right into core VectorVest with just paper trade or track and implement. So when you click paper trade, we can start with an empty portfolio, or we can start following it. Now, I think starting with an empty portfolio makes the most sense if you've already made the decision, hey, next confirm green light in the color guard, I'm gonna implement. If you're still unsure, then I think maybe following it makes some more sense. So we're gonna follow for now, and I could open it in portfolio. And when I do, it's gonna put that track record intact. If I did start fresh, there would be no track record. It would just be, nothing here that I can see performance-wise. You'd still have this yellow geniuses in a neutral mode spinning. And when that turned green, you'll start to see some stocks pop in here, and it'll give you some guidance on what's being bought. Okay. So what we have now are the intact positions. We can then look through them. We can look at where their stop losses are, things like that. And the other thing I can do here, of course, is look at upcoming earnings dates that are already known. So some of these, I believe, still need to populate in and will, but we've got Chipotle coming up on 2.6, Granger coming up on 2.2, and O'Reilly coming up on 2.8, right? So another thing that we can do, just to verify, is I can come up here to the top and go to Tools and then go to Event Viewer. When I go to Events Viewer, there's 3 different kind of events in VectorVest that you can try to get in front of and know the upcoming dates. Those are going to be dividend X dates, the actual pay dates, and of course the earnings dates. So if I deselect a couple of these, I'm then left with just the earnings date, and I can do a couple of things here. I can look at what stocks are going to be reporting on a daily basis as they come. There's a scrollable list, or up here at the top, you can filter by stocks or even a watch list. That's usually how I go. I don't really track my stocks in a portfolio in VectorVest more than I just track them in the watch list. So depending on your situation, you could go by watch list, and then you could pick one. And in this case, we'll just do the Dow Jones Industrials. It tells me JP Morgan and United Health were this morning. Goldman Sachs is coming up on Tuesday, Travelers, and so forth. But that could be your portfolio. Okay. The other thing you could do is filter by stocks, and you could type something in like an Apple, and that'll tell you that one's on February 1st. So that one's coming quicker than many of the other ones that we've been talking about so far. And of course, you could type in, I think, as many symbols as you like. I think AutoZone is still unknown. So don't despair if you don't see that one quite yet. That will be coming, and that tells you might want to check back until our data provider has that known event. Okay. All right. So hopefully we've covered a lot of ground here, and hopefully you're going to be the wiser for it. We gave you some great ideas on trading systems that have been performing well heading into 2024. The idea there, of course, is that they continue to perform well through 2024, particularly if they have established track records of doing just that, right? So that was the main emphasis. We gave you some wonderful systems to think about. We also showed you how in portfolios you can see upcoming earnings dates. And we also showed you that, if you just have a watch list of stocks in VectorVest, or, have a particular stock that you need to know what the upcoming earnings dates are, you can get them in the event viewer as soon as we are privy to that information from our data provider. Okay. That's not a VectorVest issue. That's a provider. And sometimes they're waiting from the company for the company to give them the date. So, all right. That's going to wrap it up for today. And hopefully you have a pretty good feel for top trading systems going into the new year. Remember, look for 3-time winners. Look for steadier, smoother spark charts. And a great place to start might be at 1-year drawdown for a lot of folks. Just make sure you're getting good, substantial, long-term performance with minimal risk, and you're off and running. You're heading the right direction. So there's some good opportunities right here at the top. Also on the 1 year, many different options up here, all meeting those expectations. And if at some point you want to go short, there's some ideas right at the top of this list on situations to do just that, to try to take advantage of a down market that might develop at some point this year. Okay. So that's going to do it for today's presentation. We'll see you right here next week at VectorVest University. See you then.
Yeah.